Hi, I'm Buddy Broom, attorney and real estate investor in Southern California, and I teach a personal finance class entitled Calculate Your Way to Financial Freedom. Now, in today's video, we have Sheila, who's contemplating getting a car and possibly getting a car loan, but she wants to know how big her monthly payments will be on that car loan. Now, let's get started. Hi, and welcome back. In this situation, we have Sheila. Sheila is contemplating buying a car and getting a car loan, and she wants to figure out how she can compute what her monthly payments would be on the car loan. So in this situation, you'll see that we have a piece of paper in front of us, and at the bottom we have a line and a box, and at the top we have a box with a number of different letters in there. This line in the box on here is a cash flow diagram. This helps you to visualize the flow of money, to make it easier to see and to understand. And then we'll enter the information in the cash flow diagram. Once we do that, we then enter the numbers that we get from the cash flow diagram into this calculator table. Once we do that, then we take this is a Hewlett-Packard 10BII financial calculator. We enter the numbers from this calculator table into here. And once we know 4, the calculator will solve for the 5th, and it makes allows us to get the answer. So in this situation, we have Sheila. She has the car loan that she's interested in getting would be for $25,000. It would be a 5-year loan or 60 months, fully amortized, which means at the end of the loan, it is completely paid off, and the interest is 6%. So she wants to find out what are her monthly payments going to be. So in this situation, we start off with the cash flow diagram, and we see this line here. This line represents time, present to future. And we have this box up here which shows the interest rate. So first what we do is we show time. We represent time by putting this bracket here. And we know it's going to be 5 years, and we're going to keep everything in terms of months because that's what the calculator mode is in right now. So that's what we set it in. So we put 60 months. 60 months right here, which is the monthly payments are going to be. And so then from here we know that the car loan is going to be $25,000. So the way that we show that on the calculator table, we show an up arrow. And we put 25,000 next to it. Now this up arrow represents money coming towards Sheila. Now while you might be thinking, hey, it's debt, it should be negative, because anything that's negative we put with a down arrow. The truth is, even though she's not seeing the cash, she's getting the benefit of this cash today because she's getting the right to buy the car because she's receiving it. So the cash flow diagram shows us as being a positive occurrence towards her, that she's receiving this $25,000. Next, we know that there's going to be there's interest on this loan of 6%. And so what we do is we see this box right here. We put 6 right there. And finally, we know that the loan will get paid off at the end of 60 months. So we put a little 0 there to represent everything is paid off at the end. And then finally, what we're solving for are payments. How much are monthly payments that Sheila will have to make every month? Whether we do that, we just have little down arrows. And these all represent payments that are coming out of Sheila's pocket to pay off the car loan. We don't know how much that's going to be, so we're just going to put a little question mark right next to it. Now, the way that we go from here is we have this information here. We enter it in the calculator table. So first, N is the number of months in this situation. We know the number of months are 60. So what we'll do is we'll just put 60 right there. IYR stands for interest rate per year. We know that the yearly interest rate in this situation is 6%. So we'll just simply put a 6 right here. PV right here is present value. That's a one-time occurrence of value that happens today and today only. In this situation, that one-time occurrence would be Sheila receiving that $25,000. So what we're going to do is put 25 right there. So now, and that's, like I said, that's positive because she's receiving the benefit of that $25,000 today. Payments, we don't know what they are. We know they're going to be negative, but we just don't know how much. So we will put as a question mark right here for that. Future value is the future value is a one-time occurrence that happens sometime out in the future. It happens one time and one time only. And here we know that in 60 months, the loan will be completely paid off. So that'll be 0. So that means once everything is paid off in this situation, it's 0. Now that we have these 4 things, we're solving for payments. To do that, we need the calculator. Now, if you'll see, the calculator has the buttons at the top of the calculator exactly match up to the the calculator table we have here. So now what we do is we just simply enter into the numbers into the calculator, and the calculator will do the work for us. So first, N we solve for, take 60, and then we just hit N, and now it's entered into the N for 60 months. Interest rate per year, so we just put 6. There, now that's entered into the calculator. Present value is $25,000, remember. $25,000, that's the size of the loan, so 25, present value. Payments, we don't know. That's what we're solving for, so we're going to skip that. Future value we know is 0. Because the loan will be paid off at the end of 60 months, so we put 0. Future value. Now that we know 4, simply press the payment button, and the calculator will solve for the 5th. It's $483.32, and you'll notice it's negative, so that means it's leaving Sheila's pocket. So that means in this situation that if Sheila got a car loan of $25,000, fully amortized over 60 months or 5 years at 6% interest, the monthly payments that she would have to make on that loan will be $483.32. Thank you very much for your time. If you want to learn more or find out about future classes that I'm teaching, please visit my website, www.buddybroom.com. And thank you once again for your time, and I look forward to connecting with you soon. Bye-bye.